Hi everyone. Thank you very much for joining us today for the very exciting panel that we have today for you on how embedded payment, AI and private capital will reshape consumer lending in the future. My name is Krubiner. I'm the CEO and co-founder of Pagaya Technologies, a publicly traded company under the ticker PGY. We are an embedded solution to help banks to be able to approve more consumers as they are looking to get their loans. We are working with the biggest and most known banks and lenders in the States, in between them US Bank, Klarna, SoFi, and many others. And we have already provided through our solution 2 million customers with access to credit of over $20 billion of assets. Today, joining me, Nicole, Andrea, and Thierry, to unpack that very interesting topic and to try to share with the audiences the different meta things that we are seeing. And the most important piece, and we'll try to be accurate on that, it's how all these big words, AI, embedded solution, private capital, are actually influencing people's life. So we'll start with having a few questions, but I think there is nothing more relevant than having Thierry, that is responsible for bringing us Citi Pay soon to live and to the scale. Andrea, which is the head of banking in Jefferies, that is dealing a lot with private credit every day, all day. And Nicole, that is seeing the trends of innovation through FinTech every day. So the first question, which is going to go to you, Thierry. When we think about consumer demand that is driving that evolution of the consumer lending that we are just talked about, what is the role of Citi, and how can it explain in what ways consumers are driving some of these changes and how it's influencing you as a bank to react to this demand?
Yeah, first of all, thanks for having us here, Gal. Really appreciate the opportunity. You know, when I think about Citi, the group that I'm in is responsible for embedded payment solutions and embedded lending. So we're focused on a couple of things. We serve two partners. We have to make sure that we focus on the merchants that we work with, and we have to make sure that we bring the right solution to market for consumers. I think what we've seen as we've continued to invest in research in the space and have continued to speak to consumers and merchants, there are a couple of key things that are really starting to drive and continuing to drive the evolution. It starts squarely with the consumer. The consumer is in the driver's seat, and what we've heard from them loud and clear is that they expect choice and flexibility in the point of sale. What that translates into is a couple of things. When they're looking to buy something, they want to know not just how much that item costs, but whether or not that item fits into their monthly budget. They're looking to understand how much a purchase, large or small, will cost them per month. And they're often looking for financing solutions when they're making those decisions. So as you know, we've seen a tremendous amount of innovation in consumer lending. We've been in point of sale lending for over 40 years, right? We view it as our responsibility to operate at the intersection of merchants and consumers. Like I said, what we've seen from consumers, 9 in 10 of them expect a lending solution in the point of sale. They want to understand how much that purchase is going to cost them on a monthly basis and whether or not it fits into their monthly budget. The other thing that they expect is that their transaction is going to be secure and that their data is going to be secure, right? Oftentimes when you're operating in the point of sale, we're asking a customer to complete an application in the purchase journey. So in addition to making sure that as they're providing us with their personal data, they know that it's a secure transaction and that their data is going to be secure, both merchants and consumers expect us to move them through that application process seamlessly and without friction. Right, one of the things that we talk about all the time at Citi as a partner to many merchants, you never want to hold up the point of sale. You never want to be the partner that's causing a line at Macy's or Best Buy on Black Friday, or creating that spinning wheel when someone's trying to check out in the .com space. So in talking to consumers and in talking to merchants, we've invested a lot in not only streamlining how we integrate payment products into the merchant's purchase journey, but also in conversational user interface, so that we can move a customer through the application in under a minute and make a credit decision within seconds and provide purchase credentials. So, in short, I think what we found is it comes down to a couple of things that are causing us to really evolve quickly in the space. It's really around flexibility and choice. If customers don't see that, they are very likely to abandon a shopping cart, right? 2 in 3 customers have told us, if it's not there, I'm gonna go look elsewhere to make that purchase. And then security, just to underscore, is key, and making sure that it is a frictionless and seamless experience for the consumer.
So Thierry, if I need to summarize that, the reality is that in a world full of POS, purely embedded, consumers will have an advantage of their ability to have the flexibility you talked about and the availability of credit in the point of sale. And the other point that you mentioned, which is not just a happy customer is a happy merchant, but how to do it seamlessly and easy is an important piece to make sure you're nailing that down.
Yeah, I agree completely. I think you hit all the points. The couple of things that I would add is, from a merchant's perspective, right, they're looking at how they drive sales completions and average order value. We could never lose sight of that, and that's why it's so critically important that we move the customer through the application quickly, and that we have the ability to provide them with the credit that they need to make that purchase, right? Oftentimes, a consumer is making an unexpected purchase, and a lot of consumers aren't prepared to make those unexpected purchases. So being able to provide them with the ability to do that is really a game changer for a lot of consumers. So we've invested in other things, like making sure that the merchant can share the requested sale amount with us, and we understand what the customer's trying to spend, and we use that in our underwriting criteria.
And that's definitely a better outcome for the consumers. So really interesting point. So with that, Nicole, we're going to move to you. Can you walk us through, we heard a little bit about the point of sale and really how demand is being driving and what are the solutions that the banks are trying to offer. Can you walk us through even a little bit higher level? Like, what are generally the trends that you're seeing on the FinTech side, the things that bank may be missing or didn't manage yet to solve, that you think could be a very good way to kind of like use the FinTech space in order to try to solve that?
Thank you, Gal. Thank you for having me. I totally agree with Terry that the customer is at the center of innovation. When you are innovating and you're building and you're driving to scale solutions, the customer is right there at the heart of it. And banks have had I would say, mixed review as to how it has, perhaps banks have lost trust, banks have had to earn trust. The banking sector, if you look at through history, where people are concerned about the banks that are able to, deliver to communities, deliver to solutions and products. And so that innovation at the banking level is something that has always been a through line of how we're looking at how we're going to have fintechs partner with banks. I will say that banks have had one of their greatest innovations, the ATM. The ATM was one of the greatest technology, experiences, and generationally, I mean, we have generational conversations. Gen X in the room. Is anyone for Gen X? Gen Y? I mean, we grew up with the ATM, and you're like driving into the bank, and you're getting, your money. You're making deposits. Now we're doing mobile deposits from our desks. I mean, those innovations are
People
there.
forget how it was before.
Yes, how it was before. We're like the wise sages that are like saying this is how it used to be. But we have lived through evolution, and we're still driving evolution. And I think what AI is doing, from the ATM to AI, the AI is taking it to the Uber next level. I mean, you think about the bank and what it does on the back end uses of AI and machine learning and ML. I mean, the reg tech experience. I mean, taking all of that plumbing that's happening on the back end and optimizing it and making it a better experience for those who are delivering banking services and products. So you have that back-end solution that's happening. You have fraud detection that helps the customer. That's a consumer technology experience that is driving solutions for all the hackers that are out there, all of the issues that come with having large pools of data that are being transferred on a daily basis. You have personalized banking. You have the products and services that are tailor-made for the type of customer that comes onto your platform. FinTech has been driving that. I have a couple of others. Customer service. I mean, the service, I think about financial services and FinTech. It should be finance as a service. Finance should be a service to those who are walking into your institutions, into your products and platforms. They should have an economic mobility experience. They should have transparency. They should know what the price action is. They should have a sense of what the options are. And so those are things that are happening now. I'm sure you and your businesses are thinking about how can you optimize more for the customer? How can you provide education as an aspect? How can you provide options for them that they can make those decisions? Because honestly, we can do better when it comes to managing our finances personally, and this country can do better. Globally, we can do better. And at this point, it's up to all of us to add this layer of information that is intelligence to our AI delivery.
And your point is that with the verge of an AI and the generative AI in specific, the ability to serve the customer on a better level and provide this excess of transparency, excess of information, better service, shorter line, etc., is at the tip of the finger when you're utilizing that technology properly to optimize for your consumers.
Absolutely. When I think of AI, I put it in 3 buckets. Is it automating? Is it augmenting? Or is it anticipating? And so automation has been with us. AI has been with us. AI has been discussed for 80 years. I mean, this is what's new is it's in our hands, and we are, to your point about Gen AI, we have very smart innovators like yourself who are thinking about how can you optimize this intelligence, and that's very important.
Very interesting. Thank you very much, Nicole, for that. And like everything in credit and in lending, there is always needs to be money on the other side. And here Andrea representing that. If you think about that from an evolution and revolution perspective, 20, 30 years ago, 100%, I'm repeating, 100% of the consumer credit in the United States was financed through the balance sheets of banks. In the verge and the emergence of the private credit and the consumer credit, there is a lot of private credit that is stepping in and trying to solve and close the gap, the regulatory gap, to be able to fund these type of assets. Obviously, Pagaya is in the front piece of that, working very closely with Jefferies and others to be able to take what I call the 2 other big balance sheets in the world to help consumer make a difference, which one of them is insurance and the other one is pension. And Andrea, you really have been seeing it all. Walk us through, how do you think the demand is forming? What are really the trends that you're seeing? And who are the biggest players that are observing this additional flow that is actually going out from the bank's balance sheet, although still being serviced by the banks, into a different pools of capital?
Thanks, Gal. So from a borrower perspective, the level of loan demand is really healthy across nearly almost all product sets. As you know, we have been in a labor market that's reasonably stable, but we also have the impact of inflation, higher asset prices, and that's really impacted excess household cash flows. So over the past 18 months or so, that's what's really been driving consumer loan demand. In the auto finance sector, loan demand is a little bit spottier. Again, affordability issues, asset prices has really left that market to be somewhat unpredictable. But we are seeing demand trends very strong across most types of consumer loans. From the investor side, one of the newest developments that we've been seeing the last couple of years has been a growing and significant interest from pools of capital, of private capital flowing into the consumer finance asset. You could argue that this shift is almost seismic in scale, as we've seen well over $150 billion of funds being raised simply to invest in this asset class of consumer loans. So when you think about that, what are some of the drivers in this shift towards private capital interest in consumer loans? Firstly, it's yield and market size. Consumer credit products tend to have higher yields, so investors have the potential to enjoy better risk-adjusted returns. Similarly, the TAM for all consumer credit is huge. It's over $2 trillion annually. But as Gal mentioned, there's also been the development and proliferation of the asset-light FinTech models. Companies that have taken it to an incredible extent, like Pagaya, others like SoFi, Lending Club, Upstart, Upgrade. There are numerous FinTech asset-light models that have business models that come with the pure idea that they sell a portion, all or a major portion of their loans into the secondary market. So given this increase in the size in the market of available loans, new pools of private capital were formed to invest in or chase this asset class. I also think the continued use of digital technologies within the delivery of credit solutions has also influenced the relevance and the growth in the private capital market for consumer loans. So what do I mean by that? As originators use technology to enhance loan generation, it's becoming easier and more convenient for investors to tie in operationally to loan origination platforms. And that's a real shift and a real change. We'll continue to see that accelerating in the years ahead. And finally, the use of AI. That's also been impacting the market, as most investors and issuers of credit are using some form of AI to underwrite loans, but for many, it goes beyond just underwriting the loans. It's for other factors like fraud identification, customer marketing, automated servicing, all of which really serve to enhance the unit economics of consumer loan asset. So again, it's all about the risk-adjusted yields. So in effect, what is AI doing? It's really allowing different platforms of originators and investors to tie in quickly and conveniently, while allowing for both sides to really control credit flow and monitor risk.
Perfect. Thank you so much, Andrea. And in short, all of what you have just described will end up in more credit to more consumers, full stop.
Exactly.
Okay, let's change gears a little bit and let's try to keep the answers a little bit shorter, as we have not that much of more time. So Thierry, from a lender perspective, let's think a little bit about the experience. The user experience that actually the consumers are seeing, and tie that out to us to how that means and influence financial inclusion. Do we have a better ability to serve bigger audiences as we think about these trends coming through?
Yeah, I do want to take a second to recognize Nicole's shout out for the ATM. As a Gen Zer, a lot of banks were testing ATMs in the 60s and 70s, and Citi actually commercialized the ATMs, right? So I say that because it not only spurred one of my favorite advertising campaigns for us, that Citi Never Sleeps, but it really speaks to how a focus on innovation and commercialization are in our DNA. And we do that with the customer at the center of our strategies, right? The ATM was really about giving a customer access to their money whenever they needed it, right? Banks were open from 8 a.m. to 3 p.m., I think, or 9 a.m. to 3 p.m. And for those of you that don't know, it may be a touch of a history lesson, right? What really created the popularization of the ATM was a snowstorm where banks were closed and customers were able to get access to their money. So it's a proud part of our history. When I think about embedded finance, it really is about providing access. So at Citi, when we think about our strategies, again, it's twofold, right? I really can't answer the question without underscoring the intersection of merchants and consumers. We can't effectively provide financing solutions if we don't effectively serve our merchant customers. So it really, for us, speaks to how we make it incredibly easy to embed our products into the purchase journey. I say that because a lot of times integrating embedded payments into a purchase journey is a bespoke integration. And a lot of smaller businesses or mid-tier businesses don't have the tech infrastructure to do that. What we're trying to do with Citi Pay is really democratize private label and give more merchants and more consumers access to private label financing solutions, whether they be promotional financing or monthly payment plans or even revolving lines of credit. But you can't do that if you can't easily get the product into the merchant's sales journey. So we've invested a lot. We've invested in enabler relationships to make it easier for merchants to integrate with us. The products are available via API connections, and I think the most important point for a consumer is via marketing widgets. We can provide monthly payment estimators so that we give them a level of transparency and clarity, and that drives trust. And I think that opens the credit up to many more consumers than would otherwise have access to it.
Which I fully agree and see that strategy playing well. I think the next piece, Nicole, maybe you can talk us a little bit about, take us even a step further from the very famous ATM that you put here. What do you think are the next pieces where AI, generative AI, could actually make a big influence into the day-to-day kind of like lending space that banks are doing today and are missing?
I want to, thank you for the question. I want to connect some dots on inclusion. And I want to go as far back as Alexander Hamilton, because he was the architect of our U.S. Treasury, Fed Reserve, Customs. I mean, his architecture introduced the half penny and the dime because he wanted to include more people into the financial ecosystem. And so AI is that new moment that we're having, that we can have this inclusion moment. And I want to just give a couple of examples. So credit scoring is a legacy system, and there are so many amazing companies that are architecting a new paradigm for finance and inclusion. I want to call out a few of them. So we have Tala. Tala operates out of Kenya and the Philippines, uses mobile data, SMS history, and mobile money transactions to assess creditworthiness for underserved populations. Isuzu allows renters in the U.S. to report rent payments to credit bureaus, helping build credit files. And having a thin file, you cannot get credit, so you have to add to that file with some meaningful data. Credit Tech out of Germany uses 20,000 data points, including social media activity, to deliver a credit decision. They're doing business in India and Mexico. Awazde uses voice-based AI to deliver financial education and services to underserved populations in India, providing access to financial advice in local languages. And Zest AI uses machine learning to assess loan apps, focuses on correcting inherent biases. Race and gender bias still exists in these systems. And so to your point around what's happening, we have to look at these legacy systems that need to be rebuilt. And the innovators in the room, all of you, there's so much room for growth. There are a billion people who are still unbanked. And so we need to bring people into the financial ecosystem and give them something to hold on to so they can grow economically.
And the reality is, like what you said about the penny, 100%, is that when you have the ability to provide even smaller type of lending, maybe $100 or $500, and it's becoming much easier and much more cheaper for the banks to do that, we should drive that to the ability of people to get much more credit that back in the days they might have been not have the ability to accept it. And this is really driving a change in the society and the economy. So Andrea, let's let's talk a little bit about going back to the investment world. On the consumer credit side, what do you think is the thing that is so appealing for so many private credit investors that are deploying more and more of their time and their capital in finding this pool? And how do you think that growth of that trend going to look like in the next few years?
Sure. So as I mentioned earlier, it's this large size of the market and the relatively strong yields that have initially really catalyzed the interest in from private pools of credit. But we're feeling more interest in the consumer finance asset class is this new development of the combination of asset management platforms with insurance platforms, particularly on the annuity side of the house. That's allowed managers of large pools of capital to design a more efficient way to attract capital and deploy capital into this asset class. There also appears to be this growing secular trend in part as banks continue to move away from traditional consumer lending due to the increasing regulatory issues and regulatory restrictions such as Basel III and so forth, and that provides a much greater opportunity for private credit funds. I really do see this growth of private credit fund interest in this asset class is almost limitless because the market size is huge, the risk-adjusted return potential is huge, and there's the lack of regulatory restrictions.
Very interesting. And I will add to that the big scale. There is a huge problem that these asset managers and insurance companies need to solve, which is to deploy in the very high billions. There are not that many asset classes that has stayed with that amount of overspread that you can deploy not hundreds of millions, but actually the tens of billions of dollars. So all of that makes total sense, and we hope to see more of them coming as the ecosystem evolve. We're coming to an end. Let's have the last question, which we'll try to do for 30 seconds each. Nicole, we're actually going to start with you. Go 5-10 years. We're sitting here maybe at money 2030, maybe 2035. Give us what do you think is the state of the innovation of what you would expect to see consumer credit and innovation look like. What is the next ATM?
Wow, I mean, the next ATM, the next AI innovation is actually right here, already present. Like we're walking among him, her, they, we're walking among the person that is thinking about the next phase. I will say that over 50% of Americans feel financially insecure. They do not know what their future is, their retirement, their lifetime financial security is not, they're not confident about that. I think that the future is going to look like this person or the company or the startup that can solve for that financial insecurity to bring people along to a place of information of the entire life cycle of their financial experience. Having an everything app, an everything experience where you can see how you're connected. How is your insurance connected to your retirement, connected to your, decisions you're making around spending, your budgeting, all of that, your credit, all of that in one place, comprehensive, educated, informed in a way that you can take it and you can run with it and you can do something with it.
Amazing. Thank you so much, Nicole. Andrea?
I'll try to be quick. Look, I think the migration to digital channels, which we've already seen for the last decade and a half or even 2 decades, will continue to persist to the point that the majority of lending volumes in almost all asset classes will be initiated through these digital channels. Further advancements in AI and big data tools will serve to further automate the lending process and even more than it already has. And as Nicole talked about, I think it's going to make lending much more accessible to the underbanked, the underserved, or marginalized consumer, as procedures tied to seeking credit, looking to apply for credit and getting credit approved becomes much easier and convenient. And for lenders, this is going to increase competition, right? Because consumers are going to have the ability to compare options more readily. And for the lender, this is going to make scale, size, and technological capabilities even that much more important, and so benefiting larger participants with advanced technologies.
Thank you so much, Andrea. Trey? give us the last word.
I'll focus on the consumer and embedded payments, and maybe I'll go with a nod to Hamilton. We're in the room where it's happening, and I think what we'll continue to see, maybe not 5-10 years, but more immediately, is it's really going to come down to choice, making sure that the customer has choice and personalization in the point of sale, making sure that we continue to expand underwriting and that we merge physical and digital. Consumers have a lot of choice in digital channels. We need to continue to bring those choices into the physical channels.
And I think what this panel tried to show the most, that it takes a lot of innovation, a lot of investing and knowledge about the investment side, and a unique experience and understanding of the lending side, such as Citi, to bring one happier customer to a better financial outcome. And with that, I want to end the panel and to thank all of you for coming and listening, and thank you for the amazing panelists to share with us all their experience. Thank you very much.